It's your daily dose of corporates and market, and you're watching Corporate Central. I'm Shrestha Tiwari. Over to the day's big corporate stories. First up, Buyout Group, BPEA, EQT and Indian private equity firm Chris Capital have agreed to acquire a stake of around 90% in education finance company HDFC Credila Financial Services in a deal worth about 11,063 crore rupees. The two PE firms will buy the stake in Credila from HDFC for about 9,060.5 crore rupees. They will also infuse 2,003 crore rupees as fresh capital into Credila, HDFC has said. Adani Transmission has got shareholders' approval to raise up to 8,500 crore rupees through issuance of equity shares to QIPs. According to the company's BSE filing, 98.64% votes were polled in favor of the resolution. The company's board had approved the proposal at a meeting on May 13th. In another update, the Adani Group is in discussions to rope in at least 5 new international banks as it looks to refinance $3.8 billion loans taken for the acquisition of ACC and Ambuja Cement last year. The majority of Adani's existing lenders are anticipated to participate in this refinancing. The group has also begun discussions with 2 Taiwanese banks and a Malaysian bank, among others, to expand the consortium of lenders to syndicate the above loan, which will likely entail extension of the payment tenure by 3 years. Indigo Airlines have announced on Monday that it has made a record order of 500 Airbus A320 aircrafts. The massive expansion by India's largest airline comes as the aviation industry is witnessing more competition after the entry of the Tata Group. Indigo is maintaining its hold over the Indian aviation market for a while now, with over 60% market share in May 2023. Another airline, Akasa Air, is in talks with Boeing to place a small follow-on order for 737 MAX single-aisle jets if it can fix the financing. If an agreement comes together, then Akasa may order 10 or fewer aircrafts. And on to Go First, the committee of creditors of Go First will review the airline's plans to resume operations on June 21st and consider its fund requirements. The DGCA has asked the airline to submit a flight resumption plan, which has been ratified by the lenders. Further, DGCA has given its permission to full-service carrier Vistara and No Frills Indigo to operate on new international routes from August onwards. Vistara had proposed to fly to Bali in Indonesia, while Indigo had sought the regulator's nod to introduce air connectivity to Georgia's capital, Bisli, from New Delhi. Tata Power has planned to double its capital expenditure to 12,000 crore rupees in the current fiscal, with a focus on renewables, distribution, transmission and solar equipment manufacturing capacity. The announcement was made by Chairman Natarajan Chandrasekhar at the company's 104th annual general meeting. This capex, he informed, that includes investment in the upcoming 4 GW manufacturing plants under construction, renewable projects, transmission and distribution businesses in Odisha, Delhi and Mumbai, and also new opportunities. With the completion of 2.7 GW of capacity, Tata Power's clean and green source-based capacity will be close to 50% of its total installed capacity. In the EV charging market, the company has cumulatively installed about 4,000 public and captive chargers and sold close to 40,000 home chargers. Dubbing the interim order by the Securities and Exchange Board of India unwarranted and unjustified, legal representatives for Zee Entertainment Enterprises Managing Director and Chief Executive Officer Puneet Goenka argued that the regulator had reached a conclusion without giving him an opportunity of a hearing. SAT will continue to hear the appeal against SEBI's interim order on June 26th. The hearing on the NCLT on the merger between Zee and Sony Pictures Network 2 is scheduled for the same day, although legal experts say that the NCLT hearing could get deferred further. According to media reports, EdTech major Byjus is planning another round of layoffs that will affect at least 500 to 1,000 full-time employees across teams as the troubled startup continues to cut expenses amid slowing growth and difficult macroeconomic conditions. The latest round of layoffs is expected to affect personnel in marketing, sales, business development, product and technology sectors. It also comprises teams from its coding subsidiary White Hat Junior. Earlier this month, the edtech giant, which is still at odds with the lenders of its $1.2 billion term loan B, had laid off at least 1,000 people, the majority of whom were contractual workers and on-the-ground staff sourced from third-party staffers. IRDA has filed an application in Supreme Court against the ban imposed by SAT on its decision related to Sahara India Life Insurance. In the 37th episode of Corporate Central, we had told you that SAT has stayed the decision to hand over the insurance business of Sahara India Life Insurance to SBI Life. In fact, on June 2nd, the insurance regulator IRDA ordered the transfer of the entire business of Sahara India Life to SBI Life. Under this order, the assets of the firm of Sahara Group and the liabilities of about 2 lakh policies were to be transferred to SBI Life Insurance. In the application given in the Supreme Court, the counsel for IRDA has said that the reason behind the decision of June 2nd is the continuous deteriorating financial conditions of Sahara India Life Insurance. Not only this decision also was taken keeping in mind the protection of the interest of the policyholders of Sahara India Life. The matter will now be heard in the Supreme Court on July 3rd. NCLT has given approval to start bankruptcy process against another company of Anil Ambani Group. We're talking about Reliance Innoventures. On the complaint of JC Flowers, approval has been given to start the bankruptcy process against the company. JC Flowers claimed in its application in the NCLT that Reliance Innoventures has defaulted on its loan payment. JC Flowers ARC had bought Yes Bank's 48,000 crore rupees bad loan portfolio in December 2022, which also included loans given by the bank to Reliance Innoventures. JC Flower claims that Reliance Innoventures has defaulted on interest payment of 100 crore rupees on the 1,000 crore rupees loan. Reliance Innoventures said that the collateral for the loan shares of Rel Infra, Reliance Power, Reliance Capital and Reliance Home Finance was worth 2,598 crore rupees. Before transferring the loan to JC Flowers, Yes Bank had sold shares of these 4 companies in 2019. Reliance Innoventures has also said that the value of the pledged shares is sufficient to pay off the loan. And from corporates, moving on to those stocks that are grabbing headlines for the day and also analyze the reason behind it. First up, we're talking about shares of IIFL Securities saw a decline of more than 19% on Tuesday. The stock touched an intraday low of 57.50 paise, just 1% away from the lower circuit of 20% at 56.96 paise. The reason behind such a huge fall in the stock is the strictness by SEBI. In fact, market regulator SEBI has imposed a 2-year ban on IIFL Securities for adding new customers. According to SEBI's decision that came on Monday evening, the brokerage house cannot make any new customers for the next 2 years. This company is accused of misusing the funds of some of its customers during the year 2011 and 2013. The investigation of this matter was started in the year 2014, in which SEBI has found this company guilty. According to the investigation, the brokerage house has violated the provisions of SEBI's 1993 circular several times. The company did not keep its client's account and its own account separate and used both the funds together for its needs. Overall, the company has misused the money of the customers, and according to experts, with this decision of SEBI, the existing 4.5 lakh customers of IIFL Securities need not worry, as their funds will be safe and they will be able to trade. IIFL may take legal route and may approach SAT against SEBI's order. Bearings and power transmission products maker Timken India's stock fell more than 10% in the first few minutes on Tuesday, which is the biggest one-day fall in 28 months. The stock touched an intraday low of 3,134.15 rupees. However, despite Tuesday's fall, the stock has registered a positive return of about 40% in the last 1 year. The reason behind Tuesday's fall is a big block deal. According to our data, 84.5 lakh shares of Timken India were traded, which is equivalent to 11% stake in the company. The value of this block has been estimated at 2,629 crore rupees. According to media reports, parent company Timken Singapore had plans to sell 6.3 million shares, or 8.4%. The floor price of this share sale was 3,000 rupees per share, which is at a discount of about 14% from Monday's closing, due to which the stock has taken such a huge dive. Timken Singapore had 67.8% stake in the company as of March 2023. The shares of Tata Teleservices Maharashtra saw a decline of up to 5% on Tuesday. This decline is continuing for the last 3 days, that is from Friday onwards. The stock has become lighter by about 8.5% in 3 days, and this process of degradation does not stop here. In September 2022, the stock touched a 52-week high of 149 rupees, and from there the stock has fallen by about 50%, and in this year, that is 2023 too, the stock has dived by about 21%. In the last week of March, the stock made a 52-week low of 49.65 rupees, and from there till June 12th, there was a jump of about 65% in the stock. After this jump on June 13th, BSE sought an explanation from the company, to which the company replied that they have immediately informed the exchange about any event or information order and will share any new event or information, but at the moment there is nothing more to say. From June 16, BSE had put the stock under ASM framework, that is additional monitoring, after which the stock has been falling continuously for 3 days. Generally, exchanges take such a decision when there are big ups and downs in the stock. Shares of HDFC AMC saw a jump of 12.5% on Tuesday. The stock touched a high of 2,127.70 rupees in intraday and closed with a gain of nearly 11.5%. After January 23, 2023, the stock has closed above 2,000 for the first time. That is, closing has taken place at the upper level of 5 months, and the reason for this is a big hangover that is over. In fact, UK's Adani Investment Management and a promoter of the company have sold 2.18 crore shares through block deal on Tuesday, which is equal to 10.2% of the total share of the company. The value of this deal is estimated to be at least 3,920 crore rupees because, according to media reports, Aberdeen had plans to sell 2.178 crore shares at 1,800 to 1,892.45 rupees per share. This part sale by Aberdeen is part of the plan to exit the company. Earlier in August 2022, Aberdeen Investment had sold its 5.58% stake in HDFC AMC through the open market for about 2,300 crore rupees. That was all about corporates and markets for the day. But before the showdown, over to some important corporate events and triggers which could make big market impacts. On June 21st will be the day 2 of HMA Agro's IPO. The IPO was subscribed 32% until 4:30 p.m. on day 1. The price band of IPO has been fixed at 555 to 585 rupees per share. And also, PM Modi's 4-day US tour begins. Shares of Oberoi Realty and Polycab go ex-dividend. The record date of 1:1 bonus issue of India Mart 2 falls on June 21st. Globally, Fed Chairman Jeremy Powell will make statement in US Parliament between June 21st to June 22nd. Also, UK's May PPI and CPI inflation data will be released. That is all tonight on Corporate Central. Catch all the other detailed updates from the corporate world and other major updates on personal finance on Money9's website, www.money9.com, and keep watching Money9.